This is the entrepreneur's guide to using inflation to make you wealthy. You see, most people are victims of inflation. And as the US dollar continues to be debased, meaning that its buying power goes less and less and less valuable over long periods of time, you either become a victim of inflation with a falling value of the US dollar, or you become wealthy if you know how to use inflation to your advantage. And this problem is bigger than you may have even imagined. Let me show you how big of a problem this really is for entrepreneurs. In 1971, $1,000 bought 25 ounces of gold. Today, it buys just 0.25 ounces of gold. Think about that for a moment. That means that you have lost 97% of the purchasing power of the US dollar relative to gold. And with gold trading north of $4,000 an ounce today, that's sending us as entrepreneurs a signal. The US dollar is being debased. It is being devalued. And it's your and my job to understand what's happening in the economy around us and to position ourselves so that inflation becomes a tailwind. It propels us to become more wealthy rather than holds us back from becoming wealthy. If we look at this from a graph standpoint, you can see that back in 1971, you could buy 25 ounces of gold for $1,000, and today, just 0.25 ounces of gold. This is the devaluation of the US dollar over time. And guys, this is only a period of about 54 years. This is a single person's lifetime. The US dollar's value is absolutely getting crushed by inflation. And guess who has noticed? Foreign central banks now hold more gold than US treasuries as assets for the very first time since 1995. This is an incredibly strong signal that foreign central banks all around the world are exiting the dollar and going into gold. Why would they be doing that? Because they know that the path forward for the US government is more debasement, more demonetization of the value of the US dollar. So they're shedding dollars, which they invest in treasury bills, and they are buying gold, hard assets, because they know the value of gold is constant. The value of the US dollar is always getting smaller. And gold typically follows global liquidity. This is very, very important. What you'll see in the orange line is global liquidity. That's the amount of dollars floating around the world economy. And you'll see that gold, the black line, roughly follows the same trend. Same thing happens in Bitcoin for those of you that are interested in cryptocurrencies. Bitcoin also has a direct correlation to global liquidity. Well, wouldn't it be nice if we had some insights around what's going to happen with global liquidity? Well, lucky for us, we do. You see, when interest rates go down, that is something that propels or promotes or creates more borrowing. Think about it in your own personal economy. If interest rates are 12, you're less likely to borrow money than if interest rates are at 2%. Make sense? Well, central banks around the world have just had their third largest interest rate cuts going back to 2002. The only time the interest rate cuts globally were greater than September 25 was in June of 20 when we had COVID and October of 09, the Great Recession. In both instances where central banks have started cutting interest rates, they then shortly thereafter start quantitative easing. What's quantitative easing? That is printing more money, debasing the currency, trying to stimulate the economy by printing more money, which is inflationary and will likely cause the value of hard assets to go up. The trouble is that not all classes of citizens benefit from inflation. As you can see in this chart, the bottom 50% of the US population has only a fraction of the wealth of the top 0.1% in green. Said another way, the middle and lower class are getting poorer. This is the percentage of wealth that they own. And the top 10% and the top 1% and the top 0.1%, they are getting wealthier. Take a look at this. This is the top 10% of Americans, and they have greater than 67% of the wealth in America. Those closest to the money tend to benefit when there is inflation. And the blue collar workers that are farthest from the money sources tend to suffer the most. This is a survey from the Wall Street Journal that asked people if they have a good chance of improving their standard of living. And going back to the 1980s, 75% of people said that they have a good chance of improving their standard of living. 75% agreed with that statement. Fast forward to 2025, less than 25% believe that they have a good chance of improving their standard of living. Why is that? That's because we have seen inflation rear its ugly head since COVID. It's really exacerbated this, and you can see less and less people agree that their standard of living is likely to improve. And that trend is only going to continue unless you believe that the US government is going to stop this crazy borrowing and spending track that they've been on. In fact, the US federal budget deficit, $1.9 trillion this year. So in a year we're supposed to be having a robust and booming economy, the US government is borrowing almost $2 trillion more than they bring in tax revenue. This is massively inflationary and will lead to more quantitative easing, which will lead to more inflation. So how do entrepreneurs protect themselves? Well, we wrote an article around that called The Entrepreneur's Guide to Debasement. And one of the things that we point out is that during periods of monetary debasement, you will see the value of real assets climb. We show you a step-by-step process showing you how investing in real estate allows you to sidestep the debasement and how debasement actually is a benefit to real estate investors because inflation actually destroys the value of the debt. Buying an asset in 2025 and paying it back with $2035, $2045, $2055 when those future dollars are debased and less valuable is how intelligent investors get wealthy. Click on the link in the description, check out the full article, and if you'd like to schedule a consultation with one of our mortgage advisors, click on the link in the description and get your pre-qualification in minutes.